Eric Muaded, Muaded.com, with another fundamental error video in this series, and we're going to be using the Dow Transports live chart at the close of May 2015. This is how it closed, and you can see here that there is a crossover now being shown between the 8-week moving average crossing below the 34-week moving average. So on the weekly chart, we can either use 8, let's just go back to the 13-week moving average, undercutting the 34-week moving average. So this seems like a situation where we need to be a little bit vigilant in case the market is giving us a sell signal by one of the major markets. Now compare this chart to the chart of the TQQQ, and we see here that there is no crossover. So the last time there was a crossover was bullish, going back about 2-3 years ago. On this 2-year weekly chart, so this is 2 years worth of data on the weekly, and obviously there is no crossover. This is a good market, while at the same time, if we take a look at the Dow Transports, they are giving us a sell signal based on this chart here. In fact, if you take a look at the 1 month or the one year weekly, so this is now 1 year weekly, don't want to confuse anybody, 1 year weekly, and you can clearly see the crossover here on the weekly between the 13-week moving average undercutting the 34-week moving average. And we've seen that this is a reliable signal to go short, or at least to start looking for reasons to short. For example, if this was to recover and stall again somewhere here or wherever, if it starts trickling down, if you see other sell signals, say on the daily, on the hourly, then that would be when you'd go short. So whenever you see a crossover like this, you start changing your mind a little bit and try to go in the direction of the crossover. Right now, this crossover is definitely pointing down, and so the fundamental error would be to ignore this chart. So that's one view. And obviously we had been talking about this holding above the 2015 weekly closing lows. It broke through that, and once it broke through that, it's been on a straight drop. So that's my take on this one, that A, you should not ignore this. Anybody who's long the market needs to be vigilant in case this leads into further selling, or in case this selling in the Dow Transports finds its way into the major markets. Now, so you can't ignore something like this. So there's two scenarios I foresee here. Scenario number one is that this Dow Transport instrument is leading other markets in the US sector, or at least the main markets in the US, lower. So while the S&P 500 was making new highs in the month of May, we can see the Dow Transports, last time it made highs was going back to December of 2014. So that's about 5 months ago, 6 months ago. So there could be a scenario number one, that the Dow Transports are actually leading the general markets lower. Now there's another scenario, which is scenario number two. Scenario number two is that the Dow Transports are faking everybody to thinking that the markets are going to turn down, while in truth the Dow Transports are going to bounce and they're going to be part of the market recovery. As the main markets make new highs, the Dow Transports are also going to be recovering, at least to some extent. So scenario number one is a bearish view, where the Dow Transports are signaling a market that wants to go down. Scenario number two is actually a head fake, and what's going on here is that in truth the Dow Transports are just stretching themselves, and they're going to be taking a break here before they recover and join the main markets in a continued bull market run. So one of these two scenarios will take place. So in terms of the fundamental error, in my opinion, is to ignore this chart. Of course, we've had a lot of noise and talk about this being a leader in terms of where the market goes. Dow theorists always point to the Dow Transports as at least having a way or telling us where the markets are going. So we'll see what happens. So the fundamental error number one is to ignore this chart at the present time. Now the other fundamental error number two, in my opinion, is to assume that this is a definite get out of town, sell all stocks signal. And I'll discuss this in a second. So the second error, and it's a fundamental error, is to assume because there's a price breakout that the RSI is also breaking down. And let's go to the 2-year weekly again, and just to show you, this is how it looks like in terms of the MACDs and the RSIs. You can see all of them are making multi-year lows, excuse me. On this 2-year chart, these are multi-year lows on the S&P, on the Dow Transports, excuse me. Multi-year lows, let me draw that correctly. So this is a multi-year low there, fresh lows on the MACD, and also fresh lows on the main MACD. So all of them are pointing down. I can see why people can be bullish. But what I'm going to do here is I'm going to post the analysis I did for the Dow Transports during the weekend, which was also the end of the month, end of the week. And they're going to be giving you scenario number 2, which I believe could actually be counter to what everybody is thinking. So yes, we have to understand that this is a significant crossover. It might be signaling the end of the current bull market. We have to be very aware. But there's another scenario. While we are cautious, there's another scenario, which is that the Dow Transports are bending, probably being overstretched, but they are due for a snapback rally. And so I'm going to post right here my video comments, and I might actually decide to include some of my comments on the S&P 500, Dow, and also the Nasdaq, so you can see why I made the comments and the analysis that I did about the Dow Transports. The reason why I'm doing this is because the video is going to be a marker. Of course, if you take a look at today's close, one day after the video you're about to watch, you can see that they're already showing a 1% bounce. And so we'll see how that goes. And also, just to show you, this is June 1st. My comments were made after May 29th during the weekend. And the other reason why I made my comments is because of this support line here. On the daily, I was anticipating support. We seem to have got that support immediately on the next day after my Dow Transports analysis. So I'm going to post those the video analysis. Why? So that we can at least have a time marker and understand that sometimes it is good to take the other view if you can see a good reason why the charts are misleading. And so the other fundamental error is to always believe the price. Sometimes the price is wrong. The key to understanding what could be moving the markets is sentiment. So the main thing to me, in my opinion, is to understand what the sentiment is. And the sentiment can be seen, or you can derive a sense of the sentiment by looking at the RSI. And that's why I give the RSI a lot of weight. So the RSI about a day ago was telling me that this could easily be support unless support was broken on this daily chart. And also you'll see that on the weekly, I had seen something on the long-term weekly chart for the Dow Transports that even though the price was breaking down, the thinking here was that it could bounce. And so let's go to my analysis from about 2 days ago during the weekend, and maybe somebody can learn something from this, that it is not always critical that you use what you see in terms of price. Fundamental error is to assume that price is king. Yes, price is king, but sentiment is what moves the price. So in my opinion, sentiment is God. Take that for whatever it means, but sentiment is pretty important. It's more important than price. So let's go to the video analysis, and hopefully this can help somebody who's trying to figure out how they can, from time to time, either use the price as the main tell for where the market is going, or why they should, or if they should consider the RSI as being more important than the price. So if it turns out that my call that the Dow Transport could bounce, if it turns out to be correct, good. If it turns out to be wrong, it is because at some point this line here was broken. So keep that in mind. So you might be watching this video months after this video is recorded, or years after this video is recorded. What I'd like you to do is go back and check this daily line on the Dow Transports. If this line held, then the market's recovered. if this line was broken at some point after the recording of this video, then that was the reason why we had to turn bearish, and if it breaks, we will definitely turn bearish. So let's go to the video, otherwise see you on the other side. Eric Muaded, muaded.com, with a weekend analysis video for the weekend of May 30th and May 31st, 2015. Let's take a look at how US markets closed. We see that pretty much a down day. Dow down 0.55%, Nasdaq down 0.46%, S&P 500 down 0.56% on Friday. We see that crude oil was up 0.44%, and we see that the VIX was up 4%. For the week, the S&P 500 was down 0.88%. For the week, the Dow was down 1.21%. For the week, the Nasdaq was down slightly, down 0.38%. And for the week, we see that the Dow transports were down 2.15%. Now let's go to the charts. We begin by taking a look at the Nasdaq weekly. As you can see here at the conclusion of the week, we have yet again failed to hold above the previous weekly closing high, and the level where the market needed to move above was 5,092.09. So the close was about 20 points below that. So that's a failed breakout. Doesn't mean that the market cannot break out in the coming weeks, but that's the level to watch, 5,092.09. If the market can climb above that, we can still have another breakout. For now, it looks like it's struggling, which might bode well for those who are looking for the market to go down. If you take a look at the weekly RSI, we see that the line we've been watching, and so the wedge continues, and we've been watching this RSI wedge for a couple of months, and we are still stuck in this wedge. So ultimately we are gonna break out or break down above the wedge or below the wedge for the next swing trade. So right now we are still trading sideways, which might explain why the market's been a little bit choppy over the last couple of weeks. If you take a look at the Nasdaq daily, we can see the daily failed to hold above the previous daily closing high, again of 5,092.09. So that's a failed breakout. If you're looking for a reason why the market could continue going lower, it's pretty much because of this failed breakout. If you'd like to see the market move higher, it needs to take out this recent highs, otherwise maybe we are looking to pull back. So that's a good argument for why the market is stalling, and maybe even a good argument for why the market could go lower. Take a look at the Nasdaq daily RSI, and you can see that this line here connecting the tops on the daily RSI as of right now is giving us a double top, or the last week or so, suggesting that if we use this chart by itself, more than likely the Nasdaq is due for even a bigger correction, or at least further movement lower. That's based on this chart. We'll look at other things that might be indicating a different type of short-term analysis, but for now this could be resistance based on a very simple resistance line on the tops for the Nasdaq daily. Let's take a look at the Dow weekly, and just like the Nasdaq, we see that the Dow also failed to stay and hold above the previous weekly closing high of 18,140.44. So as of right now, this is a failed breakout, and as I always say, failed breakouts can be notorious for killing a market. So we need to watch for that. Those of you who'd like to see the market trade well and trade higher would like to see the market stay above that previous weekly closing high, again 18,140.44. If the market continues trading below that, we can expect an even deeper correction. Take a look at the weekly RSI, and we see that we are struggling to hold above this line here, and again we've still continued to stay below that line. As long as the market can't move above this line, one can even argue that this is a market that is preparing over time to go lower. We take a look at the Nasdaq daily, and we can see a couple of things here. we still continue trading around the 50-day moving average here, and we are still holding generally around the 50, which is okay. We also see that there's a line connecting the lows, and this line continues to hold. So obviously if we break below that line, that might scare some traders and could actually lead to a market dropping here. So failure to hold that line could lead to some more selling. Otherwise, right now we did close at the line, if not slightly above it, suggesting that we still are looking at a market that is holding and holding firmly where it needs to hold. There's also another line connecting the recent lows on the daily RSI. If you draw it like that, you can see that we are coming to test this line, and if the market can hold, then there's a bounce that should take place. We also see a sizable drop on Friday because the Dow moved its daily RSI below 50. Now, one thing I need to point out here is that even if the market was to break this trend line here, I don't think that necessarily means the end of the bull market, because there's a line we've been watching the last 2 years where the market has been bouncing on this green line here. So we haven't even made it to this low. So it's going to take a lot of energy to kill this market, because the market is going to have to, if it's going to break down, needs to do a couple of things, and one of them is going to have to come back to this green line here, this green area, fail and break below that, and then that's when we can start looking at this market really being on a sell mode. For now, it's very hard to look for a reason why this market can't bounce. We are above the main trend line on the daily RSI here, and even on a short-term basis we continue to hold above the lows line. So as long as it is trading above either of those two lines, the Dow should be okay. If we take a look at the Dow hourly, a couple of things. If we take the line connecting, for example, the price lows, should look something like this. We see that we are still holding on the line there, so nothing has broken yet. That's why I'm saying that it's going to take a little bit of a push lower to break the market. We haven't seen the break yet, so that's a nice area where the market is closing at the end of the week there. Could hold. We'll see what happens. If you take a look at the RSI action, we're still holding above this lows line connecting the previous lows on the hourly, and this goes back to late last year, and the market is holding steady. Keep in mind I'm using RSI period of 26 just in case your charts look different. So we're still holding on that line, so that's one line of support. So let me draw that again and then add another layer of support, which is this green line here, right there. We are trading above those two lines. To me, that means that more than likely we bounce unless we break below those two lines. You can see the most recent pullback here came on the green line and also above the blue line, and just take another deep correction here, came on the green line there. Even this deep correction came with support around the green line. Even off the lows here, it was uniform activity below the green line, back above it, indicating that that bounce back above the green line was a buy signal, and we are holding above that on the hourly. To me, that means that the market, even though it looks like it could break, continues to be stable, if not probably coming back to a bounce territory. Take a look at the 30-minute chart. We go back to reason why the market is pulling back off the highs is because we are drawn this line connecting the recent highs on the 30-minute chart. Once the market came and hit that level, we suspected a pullback off the highs there, and that's exactly what we get. Now my thinking has shifted to more than likely the market coming back to support. A couple of things. Short term, we made lower lows on the 30-minute chart, while the RSI made improving highs. So that's positive divergence, could suggest a market that is improving on its strength. Also, there's a line here where the market needs to hold. So as long as the market is holding above either of those two lines, this line connecting the lows and the line going back a couple of months, anything above that would indicate a market that wants to bounce. Now let's take a look at the much discussed transports, which are indicating the potential for this market to pull back and trade lower. And that could be true that it's coming off the highs here. We haven't seen fresh intraday highs for the entire year 2015. The market's been trading below last year's intraday highs. So maybe this is leading the market lower. Of course, we don't know, and we'll see over time. My thinking here is that this is not necessarily a sell signal as far as the transports are concerned, and I'll tell you why. Yes, I do acknowledge that we have crossover between the 13-week moving average and the 34-week moving average, and that by itself, so this crossover between the 13-week moving average and the 34-week moving average is bearish. I get that and I see that, and that could indicate that yes, maybe this market has seen the high and now we are going to start cracking all over the place. That could be true. I'm not sure yet though. And we can see that crossover, if we take the exact opposite market action, was bullish action, crossover here between the 13-week moving average, moving above the 34-week moving average, and that crossover led to a nice move on the Dow Transports. Now we are seeing the exact opposite. So argument is, does this mean that we go lower in the coming weeks, in the coming months? And I'll say it's likely, and we'll see. But I want to show you reasons why I think this is not going to take place. Number one, we can see that this is where the Dow Transports made a low, October of 2011. And since this low here, we went on a nice multi-year rally. In fact, a very nice run as far as the transports are concerned. And we can see that this RSI did break out above this slight wedge here. So this movement here in the RSI is what on hindsight began this nice move. So we can draw a line, which is this green line here. And as long as the market bounces on this line, then any pullback bouncing on this line is just a short-term pullback. The market is going to recover. We can see we came close to that line here, which was a short-term low there. And we can argue we came close to that line there with a double bottom here and here. That held, which was this short-term lows. We came close here and the market held. So really, the market is coming back to test the ideal entry point on hindsight, which is this entry point. If it holds, and it's a big if and a big ask, if it holds, then the indication is that we bounce and we go higher. So that's my thinking. If it holds, of course we don't know. If it holds, expect the market to bounce as far as the transports are concerned. On the other hand, if this line does not offer support, and if the transports break below that, then we can argue that yes, this is indicating an even steeper drop in the market. The other point of view is the previous line that I have been drawing, which is this line. So this line was instrumental in giving us a buy signal on the way up. So we broke out here, which was this nice entry, and the market went on a nice run. And as you can see, nice run here. Again, the breakout corresponds with the RSI breakout, and so we've been drawing a line extension from that breakout, just like that. And the argument has been every time we come back to this line on the back test, the market was a buy and it went on to record new highs. And recently, same thing in October, which was off this very steep lows, the market did go on to record new highs. And now we can see we held here, which is this lows, and now we are below the line. But the key here is if the market, and it's a big if, can move back above that line, so back above this line with uniform activity over the next couple of weeks, then that's all she needs to move higher. So that's why I'm saying we need to be careful to assume that this cannot be a recovery area for the Dow Transports. And yes, I do acknowledge that this line has broken. So for now, the more it continues trading below this backtest line and the more it doesn't recover, then the more it's telling us that this is a broken market that should be trading lower, probably for the rest of the year. But we'll see. Also, if we take a look at the daily for the Dow Transports, let's take a look at the daily here. We can see that yes, it's down, but I've been drawing a line connecting the recent RSI lows. So a simple line connecting the RSI lows, and you can see that we have yet to break below this line. In fact, to me, it looks like we might be forming a double bottom just like we formed a double bottom here, which was during these lows. So yeah, this could be a break, and all it needs is just a slight push to break that line, and that would confirm that this is indeed in a bear market territory. But we haven't seen the break, so until we see the break, I can only think that this could very easily become support. Of course, we'll see. And also it needs to recapture this line. This line has been instrumental in keeping the Dow Transport's daily chart looking constructive, and if it stays below that green line, it could continue trading lower. So yes, a couple of things here could be a problem, but we haven't yet resolved this area here. We could very easily bounce on the line. We could very easily move back above the green line, indicating that this is just nothing but a shakeout and maybe looking to go higher. And just to show you how significant this green line here is, take a look at some of the significant lows. For example, this low here corresponds with this low on the daily. Uniform activity below the green line back above it was a nice re-entry here. Uniform activity below the line back above it was a nice re-entry somewhere here. And even this double bottom again was the lows somewhere there. So all in all, we can see that the market seems to bounce on the green line, which is where it needs to move back above that green line. If it can do that in the coming days, then this market should be poised to go higher. Now there's one more argument, which is on the monthly. And on the monthly, we need to go back about 10 years. So 10 years on the monthly, and I'll show you the third argument for why. Oh boy. All right, so that's the weekly. Let's go to the monthly. So 10-year monthly chart. So there we got it. Okay, I want to show you why this could be an area where it could bounce. Number one, we can see that the RSI broke out somewhere here, and this breakout connects the highs in 2006, highs in 2011, and once we moved above this level here, which was the beginning of 2013, which also corresponds with a price breakout. So there was a price breakout here, which was very successful because it took the market to such an unbelievable run, which corresponds with this RSI breakout. So if we extend that line, just like we did on the daily, you see that we have yet. So let me draw that again. So this is my third argument why this could bounce, is if we extend this line like that, you can see that we ended the month back at the line. So quite simply put, if we can bounce back above this line like that, then this is going to be due for a rebound. So that's one argument on the monthly that I think makes a lot of sense in my opinion. And also there's another line. So let me show that. So that's line number one. Line number two is there was a breakout here somewhere around there, and draw a line from there like that. So that's this line here now in green. If we can hold this ideal entry that began this nice move, if we can hold above that line, so if we can hold above this green line on the monthly, anything bouncing off that would suggest that the market is poised to go higher. How much higher it might go, who knows? So those are the things we need to watch. If we bounce on that, this market should be okay. Otherwise, if we break below that line, that will be bearish. And also if we break below the line extension, which is like that, if we break below either of those two lines, would suggest that this is indeed a market that could continue trending lower. For now, I think it's come back to a level where it could find support. In the interest of keeping the video slightly short, I'm gonna skip the S&P 500, but if you take a look at the S&P 500, pretty much has the same type of analysis as is the Dow and the Nasdaq. Let's take a look at the VIX daily. A couple of things here to share with you. If you take the highs on the VIX going back to last year and the recent intraday highs, you can see that as long as the VIX is trading below this line here, it should be struggling. Otherwise, if the VIX can break out above that line, then maybe there's a reason why the market could go lower. But we ended the week with the VIX still trading below that line, so we have to assume the bulls are still in control. So that's one view on the price. Take a look at the RSI. We can see that there are two lines we can consider. Number one, this line here connecting the highs on the VIX. If the VIX can break out above that line of resistance, expect the market to be under pressure. Otherwise, if it doesn't break out above that line, I would expect the market to still be at least stable, if not bullish. So that's one line. The other line is recent highs. If you draw it like so, there was a break level here. Let's draw it like that, somewhere there. If we draw a line off that, we can see that we've been struggling to hold above this line as far as the VIX is concerned. Even the most recent high here came with resistance on the line. So as long as that's resistance, I would expect the VIX to trade down and the market to move higher. Otherwise, for the VIX to do well, it needs to break out above that line also. So those two lines are where the VIX can have a little bit of a breakout. Above this line here would be a breakout. A breakout above this line is what I'm trying to say would be bullish, and also a breakout above that line would be bullish for the VIX, and a breakout above this line. If it is trading below either of these three lines, I would expect the market to be okay, if not outright bullish. Otherwise, I leave you with the S&P 500 daily, which I didn't mention until now, and as long as the SPX is holding this line here, I think the market should be ready to bounce in the coming week, and also probably early part of June 2015. Eric Muade with muade.com. Enjoy your weekend. Good luck, peace, and blessing. Mwah. E-A-C-S. Yeah. Woo! I am out. Peace.